So it was very, very important then to be in an area where the surprises were likely to be on the upside. And if you buy the bonds of B-rated companies about which there are such low expectations, maybe it's easy for there to be a favorable surprise. Now, how can I prove to you that the expectations were low? The answer is that if you look in the Moody's guide to bonds in those years, what was the definition of a B-rated bond? Quote, fails to possess the characteristics of a desirable investment. In other words, it's a bad investment. Now, I drove here from the airport in my car. And if I take you outside to look at my car and I offer it to you for sale, because I don't need that car anymore. When I'm done here, I'm not coming back. If I say to you, would you like to buy my car? What is the one question you must ask me before saying yes or no? Price. You get an A. So, in other words, it's a good buy at a certain price. It's a bad buy at another price. Moody is now saying that B-rated bonds are a bad buy without any reference to price. So, in other words, there's no price at which a company that has some credit risk is worth investing in. And by the way, before I turned to high-yield bonds in '78, I was part of the bank's machinery to buy the bonds of the stocks of America's best companies. And I explained at lunch how if you bought the bonds of Hewlett-Packard, Perkin-Elmer, Texas Instruments, Merck, Lilly, Xerox, IBM, Kodak, Polaroid, AIG, Coca-Cola, and Procter & Gamble, and if you bought them all in '68 and you held them until '73, you lost 90% of your money. Why? Because they were overpriced. The average stock since the post-war has traded at 16 times its next year's earnings. These were trading at 80 and 90 times. Why? Because they were so good. Everybody says, these are great companies. Nothing can go wrong, so it doesn't matter what price you pay. And if you pay 80 or 90 times, that's fine. So here we are, in my experience, again, experience as a teacher. You invest in the best companies in America, you lose a lot of money. Then you go to the high-yield bond business, you invest in the worst companies in America, you make the most money. So it's an instructive lesson if you have your eyes open and you learn from experience, which I did.